Imagine doubling your money overnight. Sounds thrilling, right? But what if the same move doubles your losses too? In this video, you'll discover what leverage really is, why investors use it, whether it can make you rich, the risks, the psychology behind it, and how beginners should approach it. By the way, have you ever tried leverage in your own investing? Share your experience in the comments, I'd love to know. Leverage simply means using borrowed money or financial tools to control more than you actually own. You can take leverage through margin trading, futures, or options. For example, if you have 1 lakh rupees and borrow another 1 lakh rupees, you now control 2 lakh rupees. If the market rises 10%, you earn 20,000 rupees instead of 10,000 rupees. But if it falls 10%, you lose 20,000 rupees instead of 10,000 rupees. That's the power and danger of leverage. Many investors turn to leverage because it gives them a chance to do more with less. When savings are limited, leverage feels like a way to participate in bigger opportunities and speed up their financial journey. It's like pressing the accelerator on your investments. Exciting, but it demands control. Rich investors often use leverage to grow their wealth faster, but they do it with discipline. The upside is clear: higher profits, access to bigger opportunities, and flexibility in dynamic markets. The downside is equally clear. Losses are magnified, debt must be repaid, and sudden market swings can trigger margin calls. So yes, leverage can make you rich, but it can also make you broke faster than you think. Do you believe leverage is worth the risk? Drop your thoughts below. Leverage is powerful but risky. If you're enjoying this breakdown, hit like and subscribe, and let's explore how investors actually behave under pressure.
When investors take leverage, their emotions often take over. Overconfidence makes them believe they can outsmart the market. FOMO pushes them to chase hot stocks or crypto trends without proper analysis. Loss aversion keeps them holding on to losing positions, hoping for a turnaround. History shows this clearly. During the 2008 crash, many investors held on to weak companies and saw their wealth vanish. On the other hand, those who stayed invested in fundamentally strong businesses or mutual funds with proven track records eventually recovered. But here's the important disclaimer: past performance does not guarantee future results. Even strong companies or schemes can face challenges. The key is discipline, research, and knowing when to cut losses. Leverage magnifies these behavioral traps, making psychology just as important as strategy. For beginners, leverage often feels tempting. It looks like a way to grow faster with limited savings. But without proper risk management skills, it can be like giving a learner driver a Ferrari. Exciting, but dangerous. Volatile markets like cryptocurrency make it even riskier. That's why most new investors should start safer, focusing on building discipline and experience first. What about you? If you're just starting out, would you experiment with leverage or prefer to grow step by step? Share your thoughts below. Leverage is like fire. It can cook your food or burn your house. The difference lies in how you handle it. Start small until you gain experience. Always protect yourself with stop-loss orders. Diversify instead of betting everything on one asset. And most importantly, avoid emotional training. Stick to a plan. Leverage is neither good nor bad. It's simply a powerful tool. Used with discipline, knowledge, and risk management, it can accelerate wealth creation. Used recklessly, it can lead to financial ruin. In India's fast-growing 2026 markets, leverage will tempt many investors. But the golden rule remains: only use leverage if you fully understand the risks and can afford the losses. It's not about leverage itself. It's about whether you are prepared to handle its consequences. So tell me, after watching this, do you think leverage is your friend or foe? Comment below. I'd love to hear your take. If this video was even 1% helpful or added to your knowledge, kindly like, share, and subscribe, and drop your thoughts in the comments. I'd love to hear them.